Imagine waking up on the morning your deposit usually arrives. You check your phone out of habit, the way you always do. Nothing yet. Maybe it shows up an hour later. Maybe it doesn't show up at all that day. For a moment, you start doing the math in your head. Rent, groceries, the prescription you need to pick up. All of it waiting on one small number to change on a screen. For millions of Americans, direct deposit is something you never think about. It just works, month after month, quietly in the background, until the one month it doesn't. Over the past couple of years, banks and payment processors have quietly tightened how deposits are verified, moved, and protected. Most people will never notice any of it, but for a smaller group, these changes mean delays, verification requests, or even a deposit that gets sent back before it ever reaches an account. In the next few minutes, you're going to learn exactly what's changed, why it's happening, and what you can do to make sure your own deposit never gets caught in the middle of it. But to really understand these changes, we first need to understand what actually happens before your money ever leaves. Rule 1. The name match rule. The first rule happens before your payment ever leaves, and it's the easiest one to avoid once you know it exists. Every direct deposit is really just an instruction, a specific amount going to a specific account under a specific name. For years, that instruction rarely got double-checked. Today, it does. Banks and payment systems now verify far more closely that the name on a deposit actually matches the name on the account, and that the account is still open and active. Picture someone who switches banks. They open a new checking account, move their day-to-day banking over, and forget one small step: updating the account on file with whoever sends their monthly payment. Everything looks completely normal. Their new debit card works. Their new bank app works fine. Then payment day comes, and the deposit tries to land in an account that technically doesn't exist anymore, one quietly closed months earlier. The payment doesn't vanish. It bounces back to be corrected and reissued, which can mean days of waiting for something that should have taken seconds. This is also why a life change you wouldn't think twice about, a move, a name change, switching from a joint account to an individual one, can trigger the exact same review. It isn't a punishment. It's a system built to notice anything unfamiliar, and an unfamiliar detail on a legitimate account can look a lot like a fraudulent one. It doesn't even have to be a big change. Something as small as your name being on file as Robert, while your account shows Bob, or a missing junior at the end of your name, can be enough to stall a payment that would have gone through without a second thought a few years ago. It sounds almost too small to matter. That's exactly why so few people ever think to check it until the month it's the reason their money is late. That's Rule 1, and it's the one almost entirely in your control. Rule 2 isn't. Rule 2 is about something your bank decides, quietly, every single month, without ever telling you. Rule 2. The early deposit rule. Here's something most people never learn, because there's never a reason to, until the 1 month it matters. Your bank, not the government, decides when your deposit actually shows up. Almost every direct deposit in the United States, whether it's a Social Security payment, a pension, or a paycheck, travels through something called the ACH network. Picture it less like a single wire transfer and more like a mail carrier that only makes rounds on certain days, moving everyone's payments in batches at set times, not the instant they're sent. Now picture two people, both receiving the exact same benefit payment, both with direct deposit set up correctly. One of them sees the money in their account Wednesday morning. The other doesn't see it until Friday. Same payment, same program, completely different result. The reason has nothing to do with either person. Many banks now offer what's often called early direct deposit, releasing funds to customers as soon as they receive notice of an incoming payment, sometimes a day or two before the official date. Other banks wait until the standard settlement time. And even at the same bank, that early window isn't fixed. A payment that arrived 2 days early last month might only arrive 1 day early the next, simply because of how that bank happened to process it that cycle. It's worth understanding why banks bother with this at all. Offering money a day or two early has become a way for banks to compete for customers, especially retirees and benefit recipients who value predictability above almost anything else. There's no rule forcing a bank to do this. It's a courtesy, which also means it's the first thing that can quietly change without warning if a bank adjusts its own internal processing. Then there's the network itself. It generally doesn't move new payments on weekends or federal holidays. If your regular date lands on a Saturday or falls right after a holiday, your deposit isn't late. It's simply waiting for the next processing window, exactly as designed. Here's why this rule quietly causes so much stress. Once you get used to a deposit landing a day early, your brain stops treating that early arrival as a bonus and starts treating it as the actual date. So, the 1 month your bank processes it differently, or the schedule shifts around a holiday, it doesn't feel like a normal, explainable gap. It feels exactly like the moment from the beginning of this video, a balance that should have changed and didn't. That's Rule 2, and on its own, it's usually harmless. But Rule 3 is where a simple timing gap can turn into something that genuinely worries people, and it's the rule almost nobody has heard of until it happens to them. Rule 3, the return and reissue rule. Remember that blank balance from the beginning. Here's what's actually happening behind the scenes while you're sitting there staring at your phone. Most people assume a delayed deposit is just late. It'll show up eventually, the same way it always does. But if a deposit is returned for any reason, a closed account, a bank merger that quietly retired old account numbers, a replacement debit card issued after a fraud alert that changed the account number tied to it, that payment doesn't simply try again the next day. Think about what actually has to happen. The money travels all the way back to whoever originated it. Someone, or some system, has to identify exactly why it bounced, correct the underlying record, and then send the entire payment through the process again, from the very beginning, as though it were being sent for the first time. It isn't a resend, it's a full restart. That's not a one-day delay. Depending on timing, it can stretch into the better part of a week, which is an eternity when that payment is what your rent or your groceries depend on. And this is exactly the moment scammers are counting on. They know a returned or delayed deposit creates real anxiety, especially for someone relying on that payment for rent or groceries. So a text arrives claiming your deposit is on hold until you confirm your bank details, an email that looks like it's from your bank asking you to click a link and re-enter your account number, a phone call, calm and official sounding, saying there's a routing issue that needs to be fixed immediately, right now, before the money is lost. Here's the one fact worth remembering above everything else in this video. No real bank and no real government agency will ever ask you to confirm your full account number by text message or create urgency around clicking a link within the hour. A real reissue doesn't need you to do anything at all. It happens automatically in the background, without a single text or email asking you to verify or reactivate anything. If a message like that ever reaches you, don't click, don't call the number it gives you. Call your bank or agency directly, using the number on your card or an official statement. That's Rule 3. It's the biggest one, and it's the one most likely to turn an ordinary delay into a genuinely stressful week, or worse, an opening for someone trying to take advantage of it. 3 rules. A name that has to match, a timing window your bank controls, not you, and a return and reissue process that turns a small mistake into a real delay, one scammers know exactly how to exploit. None of this exists to make your life harder. Direct deposit is still one of the safest ways to receive money, and every one of these changes exists because payment fraud targeting exactly this kind of deposit has become more common. The trade-off is that small, ordinary mistakes now carry a little more weight than they used to. So, here's the one thing worth doing this week. Confirm that your banking information is current wherever your payments originate, whether that's Social Security, the VA, a pension office, or anywhere else. It takes a few minutes, and it's usually the difference between a payment that lands exactly when it should and a blank balance on the one Wednesday you were counting on it. Has your own deposit ever been delayed or caught up in one of these 3 rules? Tell me what happened in the comments. Your experience might be exactly what helps someone else avoid the same morning.